Chief Markets Correspondent Scarlett Fu has a look at who exactly is suffering the most here from the drop. Scarlett?
Yeah, all the energy companies, oil services providers in particular, because the lower the price of oil, the less economical it is for oil drillers, oil producers, which have large sunken costs, which means less demand for the equipment that goes along with that. So for the Halliburtons, the Transoceans of the world, this is pretty bad news. You're already seeing a reduction in spending taking place, idle rigs and all of that. Bank of America Merrill Lynch's Francisco Blanche does expect a shakeout in the industry, but not right away. Take a listen.
We're going to get consolidation. We're going to get some companies going out of business, and all of that is going to lead to potentially a slower rate of growth. But do not think that's going to change tomorrow. For the next 6 months, most of the investment is baked in. We're going to continue to see growth here. Now, 2 years out, we might see a shortfall, but it will take a little bit of time before that investment comes off.
In the meantime, investors are already placing their bets. You only have to look at the worst performers in the S&P 500 since oil began falling. A lot of them are these traditional oil services companies' names, whether it's Halliburton, whether it's Nabors Industries, all of them down by almost 50% since then. Credit analysts also say watch out for highly leveraged oil services companies. One measure that they use is to look at total debt to EBITDA, earnings before interest, taxes, depreciation, and amortization, which helps you determine how many years of EBITDA would be necessary to pay back the debt. As a general rule, it's pretty alarming if that ratio hits 3 or goes over 3. Transocean is getting close to it at 2.8. Nabor is getting close at 2.5. Halliburton is doing a little bit better in that regard.
Okay, and it's not just the oil companies, right? I mean, hedge funds are closing down in response to this. Harold Hamm, one of the wildcatters in fracking, he's lost like
Chairman
billions.
and CEO of Continental Resources, which saw its share price plunge 20%. Look, reduced spending is just step one of cash conservation. You already saw Seadrill suspend its dividend last week. UBS's Angie Sedita says that Transocean is probably next in holding off on its dividend, and they're also looking ahead to perhaps some more M&A too. We've already seen Weatherford sell some assets to Lubrizol, and Halliburton's purchase of Baker Hughes means there's going to be a lot more divestments in the industry as well.
All right, a lot of action. Scarlett, thank you so much. Scarlett Fu, our Chief Markets Correspondent.